Hey guys, Andy here, and welcome back to our channel. And make sure you subscribe and smash the like button. Guys, you won't believe what the IRS is doing. They are now charging 8% interest instead of 3% interest. I will explain how you can avoid being charged 8% by the IRS. The IRS is now charging 8% interest on estimated tax underpayment, up from 3% from 2 years ago, due to rising interest rate. This impacts gig workers and those with additional income who don't have taxes withheld, potentially leading to a hefty penalty at the end of the year. The U.S. tax system operates as a pay-as-you-go basis, requiring regular payments throughout the year. Taxpayers must pay 90% of their taxes through withholding or quarterly estimated payments. Failing to do so could result in penalties, which total up to over $1.8 billion in fiscal year 2022. People with fluctuating or self-employment income, bonuses, equity compensation, or high interest earnings need to stay vigilant about their tax payments. New business owners often overlook quarterly estimated tax payment, leading to substantial penalties. And to avoid underpayment penalty, taxpayers should pay in at least 90% of the current year tax bill or 100% of the previous year tax bill, adjusting tax withholding using Form W-4 or make additional estimated tax payment can help these penalties. And guys, let's take a look into this article from Wall Street Journal. And if you could scroll down, this started as October 1st this year, where the changes taking place. Higher penalty can run hundreds or even thousands of dollars for certain, gig workers or certain business owners who don't pay their taxes on time. As you can see, last year was 8.8 billion in penalties. And then if we keep scrolling down a little bit more, the IRS don't charge a penalty for balance due that are under $1,000, which is good. So people who owe less than $1,000 will not get charged. And let's scroll down a little bit more. And if you see, to avoid underpayment penalties, a gig worker who owes $10,000 in taxes and didn't make quarterly estimated payments of $2,500 would face a $512 underpayment penalty with the 8%. And if you scroll down, you have to pay at least 90% of your current tax bill for the current year, or pay 100% of previous tax year's bill. And it all depends on the income, guys. There's also an income limit to that as well. So if you make more than 150 or $75,000 and you married, you have to pay 110% to avoid that penalty. 110% of your current tax bill. And guys, this is a pretty good graphic here that kind of like shows you, exactly who must pay. As you can see, self-employed must pay if you have a side gig, if you have investment income, owners in particular partnership. So this is just to give you an idea. This makes it looks really nice. So there's two ways you can avoid it. Look at your last year taxes. You can either pay 100% of that or 110%, or forecast the upcoming year and pay 90% of that tax as estimated tax payments. So you'll split that, whatever amount it is, 10,000, 20,000, or whatever amount it is, you divide it into 4 quarters and pay. Scroll down, these are the estimated tax payment dates. As you can see, for quarter 1 it's April 15, for quarter 2 it's June 15, for quarter 3 it's September 15, and for quarter 4 it's January 15. So mark those dates on your calendar if you pay the IRS, or if you want to get ahead and not owing any penalties so you don't get charged the 8%. And to avoid the penalty, guys, like I said before, 90% of your current year tax bill, or you can pay 100% of last year's tax bill. And guys, the best way to stay on top of that, the tips that you can I can give you, is to prepare your taxes early and also set aside cash every month. And also know what the IRS deadlines are that I show you below. And also, if you in doubt, guys, go see a CPA, go see an EA, go see a tax professional so they can better prepare your taxes. Because the goal is to not owe, or you can probably have your tax professional do a tax planning for you. And also, the IRS have tools like tax withholding estimators and various forms of W-4P or Publication 505 to assist taxpayer in calculating the proper withholding, so they can avoid underpayment issues. And also, guys, if you want to see where the fees at, let's say you prepare your own taxes by yourself, or use whatever system to do it, or go to a professional to do it for you. If you want to see how much your estimated tax payment is on the paper, well, tax payment penalty is, sorry, what the penalty is, you could definitely look at the second form of the 1040. And if you look at the where you see amount owed, if you look at this section right here, you will see estimated tax penalty, and over here you'll see the whatever the penalty is, whatever amount that it is that the system whatever software you use to your taxes calculate, you will see that right there, guys. What your underpayment penalty is. So if you want to be stay on top of that, if you want to double check, if you want to check the ones you have last year or what, a couple taxes that you've done before years prior, what your underpayment penalty was at 3%. You go back and check your previous tax return. This is should be on your 1040 U.S. income tax form. That will go ahead and show you how much you were charged last year or the previous year, so you can stay on top of that for those who want to check. But it definitely is on that paper if you can find it. And as we wrap up, make sure you speak with your CPA, EA, or tax professional, and make sure your estimated tax payment of 90% of the current year or 100% of last year, depending on the amount of underpayment penalty. The 8% can be a hefty fee. So make sure you stay on top of that, guys. Make sure you stay on top of that. Do not slack off. That's all for today, folks. Don't forget to like and share and subscribe to our channel for more updates regarding taxes, economic trends, and more. And thanks for tuning in. See you next time.